have Mr. Jeff Nelson from Movement Mortgage.
Right. Thank you for having me, Denisha. What an incredible experience to have all these different opportunities for a lot of home buyers. Definitely, these are all tools, these are all resources, right? As you can see, not all buyers are one size fits all, and not all products are one size fits all as well, too. So our goal is to find you the best thing that makes the most sense for you to accomplish your dreams and goals, and that's home ownership. So right now, I'm going to present to you our Movement Boost program. So our Movement Boost program, all right, our Movement Boost program allows us to provide borrowers with FHA financing. We would help you with a 3.5% down for your down payment. And as well, if you needed it, we will give you an additional 1.5% towards your closing cost assistance. A lot of programs spoke about down payment assistance options, but when you're buying a home, you will be responsible for closing costs as well too. And your closing costs that can vary anywhere between 2 to 3.5% on average. And what is entailed in your closing costs? Well, you have some bank fees with your lender originating the loan on your behalf. Mass Housing has their own fees. One Plus has their own fees. Every bank has their individual fees. And then you have attorney fees. Once you go under a contract, you'll be introduced to a real estate attorney that will help you with the process, right? Help you with the negotiations, help you with any renovations that's needed, the needs for the property. They will help, transfer the ownership from the sellers to your name, and make sure you have a clean title, clean transfer of ownership after the sale. So it's come to some of the things that the attorney does for you. And you have property taxes, depending on what town or city that you move into, you'll be subject to pay property taxes for the house. And then you have homeowners insurance, similar to your car insurance and health insurance. You'll have home insurance to protect the house, exterior and interior dwelling. So with that, with our Movement Boost, we would assist you with the down payment as well as the closing cost option for you. So the unique things about our Movement Boost program, well, you hear a lot of these different programs, you're going to be subject to either household income, that's everyone in the household, whether they're working or not, or the borrower's income directly. In the particular program, where Mass Housing, each county has their own program limits, where one mortgage might have a standard income limit for the household. Our program, there is no income limits. So we can help families that make $200,000 a year and families that make $60,000 a year. This is also not for first-time home buyers as well too. So what is categorized as a first-time home buyer? Someone who's never owned a home at all, or someone who owned a home 3 years ago and has sold it 3 years and has not been a homeowner for the last 3 years. So those we consider first-time home buyers. So if you are not in one of those categories, a lot of these programs you may not qualify. For us, you don't have to be a first-time home buyer. You could be a repeat buyer. Gift funds are also allowed as well too. Gift funds is from a close family member or a long-term friend, where they can provide you down payment funds as well too. So you can go buy your gift funds as well as our funds to help you. Our minimum FICO score is 600. If you're buying a manufactured home, it's 640, but our minimum FICO score is 600. So this opens the door for a lot of borrowers that are unable to qualify for the one mortgage or qualify for mass housing because their income limits are 640. So, and the DTI limit is 56, almost 57%, 56.99. A lot of the programs are going to limit you to around 43, 45, maybe 49%. The 56% allows you to carry more debt and allows you to have more flexibility for qualifying as well too. This is for primary residents only, similar to a lot of the programs that we spoke about earlier today. The difference for this program, we only give financing up to 2 units, where the one mortgage, mass housing, different programs of that nature will give you financing for 3 units as well as 4 unit properties. But we will do single family, multifamilies for 2 units, condos, and manufactured home for your search. Right here, I have 2 scenarios for deals that I recently closed for clients. One of the first scenario, they used the full 5% boost option. So they used the down payment portion for the 3.5, and then we were able to provide them additional 1.5%. This person was buying in Bristol County. Bristol County limits, I believe right now it's around 165. Let me double check that while we're looking, where their household income for this family was a 196 for that. So they would exceed that. The DTI was a 46%, which would exceed also the mass housing limitations. And you see one of the co-borrowers, their credit score was a 620, while their first primary borrower was a 675. So this was a perfect candidate for that. They had about $21,000 in total assets available to them. Their realtor was phenomenal, was able to get the seller to give them a $5,000 seller credit. And we were able to give them $33,500 to buy the house. Also, some of these programs, they'll give you up to $25,000. Some might exceed up to $50,000. There is no limit to how much we can provide to the borrower, as long as it's within the 3.5% or 5% down option. So to occupy this home or purchase this home, they end up only paying $11,000 and $11,750 in totality for this home. They were able to retain some of their assets and add towards their savings and acquire the home that made sense for them. Here, I have another client here who did not need the full 5% option. They need the 3.5% down option. And I did not speak on it earlier. The difference between the two is the monthly payments. One of our presenters earlier today tell you down payment assistance comes in different forms. Some of them are grants. Some of them are repayable at part of, selling of the house or refinance. Some are payable monthly as part of your mortgage payment. And that's what the movement boost is, right? It would be an extra component to your mortgage payment, and depending on how much you borrow would increase that mortgage payment for you. So in this scenario, this client, they were getting they had $10,000 in savings. They were getting an additional seller credit of $22,000. So when they looked at the overall cost, they only needed about $22,000 in down payment funds from us. Their total out-of-pocket cost was only $4,700 to acquire a duplex property for $650. We had 3 borrowers in the household. One was a 626 credit score, one was a 674, and one was a 758. They had a debt-to-income ratio for the household of 51, and their total income limits was $187,000. So in both scenarios, this was Worcester County. I didn't put the county in here. This is Worcester County. In both scenarios for the other programs, they would be over the limit for those programs. Also, the debt-to-income ratio, and they did not meet the minimum credit score requirements, but they were still able to get the home that they wanted to. And look at those out-of-pocket costs. That's really a major piece when you're looking affordability and you're looking to diversify. A lot of times, $10,000 is not enough to get the job done. But in this scenario, they were able to get an asset that produced for them and get a home that they really wanted. That's pretty much a quick overview of the movement boost. Is there any questions?
So I will say, thank you,
Yeah.
Jeff. Awesome. I don't like the high debt to income ratio people, but
Yes.
how it works is this is where you talk to Jeff or your loan officer so they can see the whole picture of your life to understand if it's a strategy and why you're going to go to that limit, so that you qualify for the mortgage, but making sure you can afford it. Because what we don't want is that you just want to buy a house so bad that you get yourself in financial ruin once you close on the property. Okay. So Jeff,
That's
how
that's
do
a
you help
phenomenal.
them figure out the numbers so that they don't do that? Because some people, they need our help just to refocus and understand that they have to afford the house.
That I love all of that you just said, Denisha. My job is to help you keep the house, not just get the house. So for the example that the 3.5% boost, that's a duplex. So they have the ability to offset some of their mortgage payment to their tenants. So in that scenario, when I'm speaking to them, I'm like, okay, we're going to look at a full financial picture. You're going from renter to homeowner. Your mortgage payment is going to be a lot of times, especially if you start getting into this type of price point, more times than not, your mortgage payment is going to be a little bit higher than what you're renting for. The trade-off is you're investing into your future versus into someone else's future. But that being said, we want to take a look at your full financial picture. When we're qualifying you, we're only looking at a few things that's being reported on the credit report, plus the mortgage payment. But if you have daycare, we want to factor that in. Your gas, your car insurance, different things of that nature, groceries, just your overall lifestyle to make sure it makes sense for us. Because what you qualify for and what's affordable are two different things. Eligibility and affordability, two different things. So for this family, the three of them, they looked at their total income and they're like, all right, our mortgage payment, I should have put it on here, good notes for next time, but their mortgage payment as a household was going to be around their out of pocket fees. Give me 1 second, just pull them up. It's going to be around $3,500 between the three of them. So in their mind, they're like, okay, this is affordable for us. We have a tenant that's going to pay us 2,500 on the other side. This made sense for us, and we were able to retain a lot of our assets to get this home. Where this family on the top with the 5% down, their DTI is a little bit lower. It's at 46, but one of our borrowers is a 620 credit score, and mass housing and a lot of these other programs, they have a hard cap at their 45%. So we wouldn't be able to utilize the mass housing program. But if you look at this family, they put them in a great position to become a homeowner. And both of these houses, I closed them last year. Both of them are one walked into equity and the other one already gained equity into their homes. So these were quality buys for these people. So if you don't have a unique scenario that makes sense for you today as well as tomorrow, maybe you should wait. Maybe we do pay some debt down. Maybe we do grow their credit scores. A lot of these clients, we did have conversations about their credit profile and how they can produce that. So you wanted someone who's going to take care of you and walk you through the whole entire process.
Awesome. Thank you. And all of these lenders, guys, I have worked with them or have clients who have worked with them. So when I say I'm concerned about the debt to income limit, how high it is, this is where I would make it mandatory that you would have a conversation with Jeff so that he can walk through your finances to really figure out where you stand with everything. Because although he has the product that can work, we need to make sure that you can afford it. And he's really good at helping you put a plan together to make sure you stick to it, right? Or that it's realistic for you. So when it comes to strategy, and would you say, Jeff, for the most part, these income limits in the program is best suited for people who are planning to buy a multifamily? Or what have you
Yeah.
seen in your experience?
What have I seen in my experience? This program is ideally for families who are looking for to do a two family. Some families, they're not comfortable with doing the three family or four family. They don't have um, hopes and dreams to be a landlord, to be an investor, but they understand the cost of living is extremely high. They understand the affordability process. They understand using the assets to help them offset some of their debt. So they'll definitely look to leverage this. And if you can retain, like I said, and for both examples, both families, they received more funds than they had available to get the house. And it put them in a better position moving forward because now they're homeowners and this is a single family. The cost for them in the area they wanted to be in, this family had a young child and had assistance in the house where their parents lived close by. So it made sense for them to be in a single family. They did not want to do a duplex. But if you're not at this type of price point or income limit, it may not make sense for you. So we look at the full picture to put you in the best position to be successful.
Awesome. Someone asked about the scenario, and I would say if once we start getting into mortgage payments and all those, that would be where I would say have a conversation with the lender because
Yep.
those things, what worked for someone will not be your number because it's debt to income ratio, it's credit score. There's a lot of factors that go into what got them to their mortgage payment.
Yeah.
So just making it a blanket statement is not, I wouldn't suggest. That's not an accurate depiction for you guys as first-time home buyers. That's why we
Yeah.
encourage you to have these strategic conversations with lenders because it's really important. And also understand not all lenders talk strategy. Some lenders just want a pre-approval and they send you on your way. And then there's some lenders who will sit and plan it out for you and see what can work or what's in your best interest. Okay?
For sure.
Yeah.
Even if you're looking at here, I wanted to give you some visuals to have it to show you that it is possible, right? A lot of times your dream seems so far away, and that's not the case. It's just a little bit tweaking here and there. Your family could make 187,000. You both could have 67 credit scores, 620 credit scores. Your profile still will be different. Their debt and your debt are two different things. What you're comfortable with a monthly payment and what they're comfortable with a monthly payment are different, but it definitely gives you some more. Like I said, these are tools. It gives you more tools to add to your repertoire where everyone was spoke like, hey, speak to multiple lenders. You might heard the 1+ mortgage sounds really attractive to you. So I'm going to sit down with a lender that can do that. I'm going to sit down with the mass housing. If both those options, I'm going to look at the boost option and some other options you're going to hear today. I'm going to contact Amy. Right? These are your goals. These are your dreams, right? Use these tools to benefit you in the best way.
Amen. So what I expect you guys to do tonight is not tonight, but this month in this summer is watch the replay to tonight's presentation so you can take notes and figure out who do I want to interview? What are the programs that I think I'm eligible for? So you can dig deeper and ask those questions. Because like we said, there's down payment assistance out there for, I would say everyone kind of falls into at least one of these programs that we talked about tonight, multiple, right? So you want to know that going into it so you can have more informed conversation. Jeff, do you have products for manufactured homes? It's one
I
of the questions
do.
in the chat.
Yeah, this product in particular it does do manufactured homes as
There
well.
we go. So
Yeah.
boom.
For
Awesome.
if you're seeking a manufactured home, the credit score will need to be a little bit higher, as it alludes to 640. But we can still give you financing and down payment assistance for manufactured homes.
Awesome. Where there's a will, there's a way. We just have to ask the right questions. So thank you, Jeff, so much for your time. Appreciate it. Great presentation. Hopefully you guys learned a lot. Again, you'll get all of the presenters tonight, their contact information. Okay. So you can reach out to them to ask your specific situation, work out scenarios, all the things.